Sellers attempted another breakdown under the key demand zone that we've been watching for a few months now, but didn't see follow through in essentially what was a rerun from 2 weeks prior. Still, are sellers setting up a rug pull moment and looking to set a major high in the market, or will they throw in the towel essentially after two failed attempts? My name is Lamont. I've been a full-time trader for 8 years now, part of the Chart Guys team for more than half of that, where I head up our futures room and our swing report. And in this video, we'll answer those questions and more. So let's get into it. Okay, so if y'all recall, we've been watching this guy, right? This guy that was established from November 7th to the 14th. This was essentially the last area where the buyers failed to hold a backtest over, right? So here is the December FOMC reaction, and this trend was totally fine as long as we were backtesting a prior area of demand, like over here, and then breaking out, backtesting a prior area over here, and then breaking out, and then again, here is where they have failed. So as of right now, essentially the opposite of what was going on over here is occurring right now. Right here are the sellers using this structure as a reference, selling off of it, and that would have kept these sellers in a good position essentially, right? Because they would be rejecting from the all-time high supply. Not only that, but they would be rejecting also from the structure sitting directly under the all-time high supply. So essentially they'd be advancing beyond two areas. And really it's the break under this prior area that would be the key. Just breaking down from and creating overhead supply is not enough, right? Over here, you break down and you create overhead supply. If this becomes overhead supply, you break down over here, but you get caught up right here in this the most relevant structure, right? This is a prior supply now acting as demand. And so things were just fine. Same thing over here. You create overhead supply, come down, backtest this demand, and then things are just fine. So the buyer's objective right now is essentially to pick up where they failed, right? They want to pick up where they essentially left off over here, right? They were unable to hold the backtest of this structure over here. That's their goal right now. It's the opposite goal for the sellers. The sellers were using that structure as resistance, rejecting off of that area a few times, and not really seeing much follow through on it. So it's kind of the opposite right now, right? Where we are above this structure, and although these buyers aren't advancing very well, just like the sellers weren't advancing very well over here, at the same time, they are still holding, playing a solid defense against this structure. Okay, so that's what we're looking at right now. And as I was saying in the intro here, very, very similar situation these last 2 weeks, right? Where you had a gap down open, break through this structure. You opened up almost at the lows of this structure at 594.37. Don't see follow through and then rally for the pretty much the rest of the week. And then we get some, I think it was tariff news both weeks, right? That led to some selling in the market. It's the same exact situation that happened this week. Gap down open under this structure. That is the go sign, right? That is the primary objective, is to just stay under here. So these sellers were positioned really well to start off the week to press the issue here, but of course they did not, right? And so you had another situation where you rally for most of the week, and then tariff news hits, I think it was like mid-morning or something like that. It was like very soon after the morning stream. And then we see some selling, right? So the question for next week is, or the key for next week is really the same that we've been watching for months now, right? It's, can they hold over this guy? So as of right now, there's a good amount of space for potential daily higher low over key short-term support 590.49. That's this low over here. And you notice the low of the day on Friday was pretty much smack dab right off of this high, right? It's the high of this structure is 600.17. The low of the session was 600.05, so a slight break. So next week, it's really all about this structure again. And if we do see lower lows next week, but we can't find acceptance under 598.16, that's going to let us know that things are starting to shift a little bit, right? Because the last prior test of 598.16, they didn't hold, but they also didn't advance, right? Like, just because you break the level, it's not enough. It's like, it's acceptance that we really care about. It's kind of like, I like to use like military forces as an example, right? It's not enough that you raid an area, right? A raid is when you attack a place and then you retreat, right? That's not really longer term. That's not really going to make any meaningful change, right? You might disrupt the flow of your opponent, but you're not like digging in and claiming that area, occupying that area essentially, right? So occupying that area would essentially be acceptance, right? These are more like raids where they go in, they break the structure, they cause a little chaos, but then they retreat. The sellers retreat back to beyond this fortified area. So these are two very notable failures, right? Just like these were notable failures to advance, and these were notable failures to get back above it. It's the same idea, just the opposite now, right? So this is indicative of essentially weak selling, right? Like, because if the selling was stronger, then they would have held under this 598.16 level. They would have pressed the issue and continued to test the lows of this range, which is still very much on the table. And again, it really just matters. I mean, it really just depends on this guy. This is really the key next week. So really, that's it. That's really it for the SPY. And if you can continue to hold over this guy, and affirm this structure as demand, well, then what does that mean? That means we really only have this all-time high supply. I know we popped over it a little bit over here, but there really wasn't that much acceptance. So I'm still using this guy as my primary reference. So again, holding over 598.16 keeps these buyers positioned really well for a go at new highs. I think if we have another go at new highs after all of this consolidation, lower lows lacking follow through, you probably press to R1. I would imagine that if you break over 610.78, then you probably press to the R1 here. So that's really it. That's really it. Okay, and so if we do find acceptance under 598.16 next week, then we should be looking, the odds of further balance within this weekly balance to come and test the range lows would significantly increase. So it's all about acceptance under 598.16 next week, just like it was the key last week. So that's pretty much it. I mean, it's been the key structure since November. So that is really it. Did we do a trade zone? I don't think so. Oh, we did do a trade zone. So I guess we were just looking for, no, I think this was from back here. This was from back here. So the same exact trade zone. And it was designed around this structure. That continues to be where I think your play should be, right? You're looking for essentially inability to find acceptance under here as a buyer. If you're a seller, top fishing off of this range, I don't hate that, but it's the most aggressive sell right now because you are selling against the blue sky. But again, I don't hate that, right? Like it's not a bad play. It can be very hard to sell against a blue sky bull, but right now this is not really a blue sky bull that's ripping to new highs, right? It's a blue sky bull that saw a breakout, no follow through, and bigger pictures and bouncing sideways. So if you're a seller, in this area, I don't hate that at all, but this is a situation where you probably want to get your risk out of the equation and then, see if the sellers can follow through. Okay, it's essentially taking like pretty much a hedging approach to that sell. Okay, so moving on to the Qs here. So QQQ, very similar situation, right? Same, but different. This is the key structure, right? This is the key structure that these sellers broke through on the FOMC reaction. The buyers were unable to hold this guy as support, and so their objective right now then is to hold this guy as support. And so you get a very similar situation. Gap down open, buyers ran it with it for most of the week, and then tariff news hit and the consolidation comes. And so as of right now, you'll notice that the sellers have not touched down on 521.74. You can see how much volume was traded here. Like the market is letting us know that this is a very significant area because a lot of inventory has exchanged hands here, where people think that this is more or less fair value, fair price to do business within this local range. So the goal for these buyers next week is to just find acceptance over 521.74. Finding acceptance over 521.74 affirms this structure as demand. Affirming this structure as demand, again, has them picking up where they failed last time and keeps them essentially a stone's throw away from testing this key supply, which I have marked up on the hourly time frame because it's not really much of a daily structure. But if you zoom into the hourly, if you zoom into the hourly here, it's a very, very clear area of balance over here, hourly supply overhead. We already had 2 rejections from the low of the structure, and so that's what we're looking at right now. You could mark this guy up as well. I would not be surprised if these rejections were off of like a key level of this supply, but this is not as meaningful as this guy. This is the all-time high supply. That's what these buyers are trying to get up and over. So that's it. Acceptance under 521.74 next week would increase the odds that we are just continuing to do this messy weekly balance, and that's pretty much it. Space for a daily high or low, anything over 511.05 will be good for one for the Qs. And then finally for the rut, this was a very notable rejection. So I've been using this level over here, 230.55, because if you zoom into the hourly time frame here, you'll see that this was essentially, this over here was the hourly supply before the December FOMC breakdown. So in order for these buyers to negate that breakdown, they have to find acceptance back within this structure, meaning they need to get back over 230.55. So it's very notable that these buyers failed to find acceptance over 230.55, and now we're pretty much just smack dab, within this local daily range. Now, the IWM, the rut is, relatively weak, right? It didn't break over the 2021, well, rather, It did break over the 2021 high, but found like pretty much no acceptance before retracing back down again. But I've got this point of control marked up over here because the two key structures that I care about regarding this 2021 balance here is this guy over here, which is a gateway structure into all of this. You can see how meaningful it was here, 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 and here. And again, you can see how meaningful it was here, 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 and over here throughout all of this hot mess. So I just have this point of control marked up because all of this price action starting from September 16th was affirming this guy as demand, right? Holding over this fella as point of control, over this fella's point of control affirms this structure as demand. Affirming this structure as demand means that we should expect balance like this, which is exactly what we're seeing right now. So I would not be surprised to see some further balance, some messiness. And as of right now, this is all technically constructive, right? Because here you had an area of supply. Once we broke down from here over here, could not find acceptance below the supply, break back over it. I call this the triple B setup, the bread and butter burrito. It sounds nonsensical, but it's just because I name most of my plays after burritos just for a community joke reason. But anyway, this is constructive, right? These buyers are holding backtest of this area as demand. And so as long as we're holding over 221.09, then we're affirming this guy as demand, affirming this guy as demand should have us looking for further balance like this. So these sellers, the buyers, I should say, should be trying to get back up to this all-time high supply here at 235, the low of which is at 235.92, as long as they can continue affirming this guy as demand. We should expect price action like this. So there's space for a daily higher low. Anything over 220.67 will be good for one. And finding acceptance under 227.17, that's this guy over here, is kind of a red flag, right? Because if we find acceptance under here, that means we're still trying to resolve this kind of a structure. So if we see lower lows next week and we can't hold over 221.09, it's not going to be, it's not a good look by any means. But if we can hold over 214.60, then we're still just trying to resolve this structure over here. And ideally, we can hold over 217.60 to continue affirming this guy over here as demand. Affirming this guy over here as demand, keep these buyers positioned pretty well for another go at the highs of the all-time high supply. Okay. It doesn't usually just sit in one spot, so that's just notable to me. It almost makes me worry, like he's gonna attack me or something, which people have told me is a sign of endearment from a cat. Like, I don't love it, but it is what it is. All right, so moving on then to the Dow here. So for the Dow, very notable, right? Clearly this all-time high supply is being affirmed, right? We can see a bunch of pop and drops, 3 pop and drops. So 3 sessions in a row, you get pop and drops at the point of control. And then the high of the day for this day is pretty much right at the value area high. So this is all just still local balance though. So while these buyers are not advancing well, they're not flipping this for point of control 449.33 into demand, which would essentially put them back on complete offense into blue sky breakout. While that is being problematic for them, you can see this, very clear point POC rejection over here. At the same time, this breakout is not negated without getting back under 433.67. So if we do see a lower low next week under 438.70, it's all good as long as these buyers can hold over 433.67. Any kind of balance over here over this structure is still constructive relative to this breakout. So that is that's pretty much it for the Dow. And again, I wouldn't be surprised, right, if we're looking at bigger picture balance. That's just kind of what the indexes have been doing. So I would not be too surprised with that. But in order for them to do that, they need that lower low first. And then, of course, under 433.67. That is pretty much it for the Dow. I think we have like a updated trade zone playing off of this guy. A more conservative operator, though, you're still just sticking with this fella, right? Because there's just so much more volume traded down here than there is up here. But if you're a bit more aggressive, right, and you're looking for this area of demand to hold, I don't think that is unreasonable at all to be looking for that trade over here as well. And then if you stop out, maybe stay frosty for this guy. And if you want to essentially cover all your bases, then you can just increase this, right, to something like this. And if you're trading shares, then the percent risk is not going to be that high at all. Obviously, if you're trading futures, it's a very different story. But if you're just trading shares, then even something like this, trying to include this area as well, I think this is very reasonable. Just essentially responsive trade, looking for bottom fishing off of the local range, and then if the lows of the local range hold, these buyers should be trying to get back up here. Alrighty, so moving on to the dollar here. So the dollar, um, very notable, right? So the dollar, remember, we care primarily about this guy over here, this fellow over here, which was containing price throughout here and throughout here and throughout here. Very, very notable POC rejections over here. And then a battle for the structure over here throughout all of this price action oscillating around his point of control. And then finally you break out and hold the back test of the value area high, which is like pretty much, it's not the best case scenario, but it's better than holding the point of control, right? These sellers were not able to move all the way back down to the POC of this key prior supply now acting as demand, which again is a good look, right? These sellers, the goal for sure is to get back down here, flip it back into resistance, and then that would essentially have us looking for more balance like this, like we've been seeing since 2022. So as of right now, this is a pretty good look. Already dipped into our trade zone, got to the target, came back into the trade zone again. This is just, again, a responsive trade kind of a setup. You're looking for further balance like this, and you're using this guy, this guy and this guy as the key references, because if you don't trade under this guy, then these buyers should be trying to get back up here, which is exactly why the trade zone was designed as such, and it's already, again, activated and got there. So that is really it. There is space for a lower high. Anything under 109.750 is going to be good for one. And as long as we're holding over 106.335, so as long as these sellers cannot find acceptance below 106.335, then this structure continues to be affirmed as demand. If this structure continues to be affirmed as demand, then again, we should be trying to get here. The buyer should be trying to get here. I always know where they're trying to get to. I never know if they're going to succeed, right? It's the same idea as like sports, right? Like you always know, one team is trying to get to the other team's goal, right? Do you know that they'll get there? You do not. So if you're if you bet on sports, which I don't, but if you do, then what do, right? You just kind of bet on where you think the odds are based on the team's current performance. So as long as the team is beyond, let's call this like the 50-yard line, I guess, then they're positioned well to score, right? Assuming we're talking about American football. And I guess by position well to score, I mean like a field goal, not necessarily a TD from 50. Could have, but that's really it for the dollar. Okay, so moving on to NVDA. So NVDA, I think it's super key spot for NVDA, because all of this balance over here is now overhead supply. This is all net sellers that were over here because we broke down from it. So we were watching this key structure over here, which is what held a back test over here, held a back test over here, held a back test over here off of the high of the structure, not the key level, but the high of the structure over here. So clearly the market has told us that this structure is very important, and you can see what happened, right? What happened is now it's flipped into resistance, right? A couple of pop and drops over its point of control, and then now these buyers are looking like they're trying to find acceptance above, but I would be very wary of this, because this move is pretty much straight off of the lows after holding this key point of control. So I would not be surprised to see some consolidation next week, and there is space for a daily higher low over 113.01, but we're now smack dab in the middle of what I think this is potentially just going to be a big old balance area, right? Very similar to like Microsoft. A lot of the Fang Man names, have been consolidating and just kind of trading sideways, kind of taking turns, breaking out, and then creating these large areas of balance. So I would not be surprised if we're looking at something like that. And if we are looking at something like that, then, I think the best value plays are going to be over here. Again, you can see how much volume was traded here, roughly 90 bucks here. And the last time that we came back and tested this area, it was a very clear hold of this key level here, the failure to touch down on the point of control. And then, of course, we rallied above it. So I think that's a buy. If we get daily reversal conditions into this guy, personally, I think that's a buy. I don't think we got quite down to daily oversold. We haven't been daily oversold in a very long time, ever since September of 2022. So if you give me the first daily oversold conditions into this 89, 88 level, I'm very interested in that. I think that's a very reasonable trade zone, but obviously we would need to lower high and then drill a little bit before that sets up. So in the short term, though, I would not be surprised by setting a lower high under 148.97 on the weekly time frame. Okay, so that's really it. I don't really like any additional trades. I know our original trade zone nope, that's the conservative one, and I know that this guy is essentially activated again. So we already dipped into it over here and then got to the target, and this was really just looking for this structure to hold. Responsive trade. I apologize if you can hear the cat. I don't know what he's upset about. He's always yelling, just seriously, a very vocal cat. And so we've come into it again. And I would be a little bit apprehensive here because when we were dealing with all of this back here, you didn't have as much overhead supply. So if you did use this guy again, ideally you'll chop it up. Ideally, you've already chopped it up, but no later than 131.26 should you look for a partial exit, third stop under the local low for any remaining position, and then if it rolls over, stop out, reset, and then look for that play down here is what I would do personally, is what I will do personally. Moving on to Bitcoin here. So Bitcoin's still just hanging out in this, not forever balance, but some balancing for a very long time. And this is constructive as long as these buyers are holding over this structure over here. There's already been like half a dozen holds of the key levels of this structure, whether that be the high or the value area high. This is it, right? And why is this so important? It's because this is essentially a consolidation of these gains, right? And so this is a big old rip up. This is consolidating this big old rip up. And as long as these sellers can't flip this guy into supply, well, then this big rip up is still being affirmed. So, it's really just still sideways trades. So you call it exactly for what it is. The buyers are not advancing, but at the same time, the sellers are not negating any of this change here. So daily lower high is potentially being set here at 100,235.79. And in order to set that high here at a lower high at 100,235.79, just need a break under 95614.96. Okay, and if you look at this from a developing point of control and value area perspective, you can see, okay, we're right smack back into balance, right? Because all of this over here was constructive. Holding over the value area high means that these buyers were trying to move value higher relative to this local structure. That's what a good breakout should look like. Like if we look back here, it's the same dealio. It's actually only off the point of control here, but that's the idea. We want to hold over the POC, the developing POC. Once you trade through it again, now we really can't be that confident that these buyers are going for that breakout, right? So these buyers need acceptance back over the Depop here, and then of course over the Diva, and then we'll be back to thinking, okay, these buyers are staying positioned well for a break to new highs. Until we see that, however, or if we don't see that, then responsive trade is still the name of the game, right? Like you can just be looking for these pass back over plays over this key structure, the trade zone. I forget what it was. It must be designed off of that key structure. This guy, it's already dipped into it a couple of times and come out of it. I think that trade is still very reasonable. I know that like things may seem toppy, but we don't know. You never know, right? Like the game is not in predicting. The game is in knowing where you will place your bets, right? The game is in understanding where there is the potential for change and playing for the affirmation of the change that just occurred, as long as that change is affirmed, right? And so if that change is negated, okay, then we change our story. But as of right now, that's not the case. So still very reasonable to be looking for bottom fishing plays off of this structure, in my opinion. Although, again, I do think that buying weakness is tough in this kind of market conditions. And I think it's better to be reacting off of levels. So when these key levels get tested, assuming you're comfortable with that, right? Like if you're comfortable with operating on the lower time frames, then what you want to do is you want to see extension into these key levels. And then if those key levels don't hold because there's already been extension into it, then you're going to fade that move, right? So you'd be fading these sellers here, essentially. You'd be fading these sellers here. I hope he's not messing up my screen because that's what he's doing right now. So that's pretty much it for Bitcoin. For Ethereum here, so Ethereum popped through our zone, and this is a situation where like you kind of have to stay frosty for this, right? Like again, I don't really love buying weakness in this kind of a market right now, so this is kind of a situation where I think it's better to be reactive. Now, I'll be honest with you, it doesn't look great, right? Because you trade through it, you get this big wick up, but to come back down and then backtest this point of control here, it's not great, right? You wanted to see like a big wick up like this and then affirm the breakout over 2814.12. So I think an aggressive buyer is reasonable. Like it's obviously this setup is already passed, but as an aggressive buyer looking for inability for sellers to find acceptance under 2570.27, essentially playing for a potential daily higher low, I don't hate that. I think that's a pretty reasonable play. So if you get another situation where you break back down under this point of control, no acceptance, pass back over, you can buy that. There's stuff under here and chop it up no later than here and see if they can break out and get back into this structure over here. So that is really it. Now there's not really a setup that, at least I don't think that there's really a setup that I'm terribly interested in right now. if we were to play off with this point of control again, I would prefer to see us like rally a little bit first, such that if we were to get back down here again, things would be extended. Then we can look for that pass back over play, and that's really it. This is a super key test here, 2570.27. Essentially, you want to affirm this guy as demand. Affirming this guy as demand would mean that we should expect price action like this. All right, and I'm going to switch over from CCJ to covering URA. Let me get this out of the way here. I mean, this is a reasonable trade zone, so I think it's reasonable to be looking at it like this. But let me just get this out of the way here. And the reason why I think this is reasonable to be looking at it like this, I think it's kind of aggressive, right? Like really what you want to be looking out for is, can these buyers hold over this area of demand, which you can see, two very clear holds at the point of control. But if you're a bit of a more aggressive buyer, right, then you're looking to play off of this guy, because the market has already told us it's important over here and throughout here, 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 and here. So anyway, I'm going to start covering this guy instead. It's a spot price for uranium instead of CCJ. We were covering CCJ because CCJ had like some relative strength, but I think I would prefer just covering the uranium. I don't want to deal with like the business side of things. Like I don't really want to deal with that, because the only reason why I'm interested in covering uranium and materials in general is just because I kind of feel like I think it's reasonable to expect more demand from materials, right, as we look to build out new tech, right? Because AI or whatever, it's going to demand infrastructure, right? It's going to demand energy and infrastructure, right? So yeah, and right now, we could use more energy, right? Like we've not solved energy essentially, right? So how are we going to get to that endpoint where we can solve energy? And by solve energy, I just mean like providing enough energy for everybody, right? Like right now we have a finite energy supply, and theoretically, if we could solve energy, maybe I'm naive, and but I kind of think that humanity has a pretty good shot at not eliminating ourselves if we can solve the energy situation, right? Because that would theoretically could raise the floor, right? Like right now, there's a very high ceiling, right? We have billionaires. You can be a billionaire and have like more wealth than you would need for multiple lifetimes, really. That's a high ceiling, right? But the floor is not so high, right? We have plenty of people who are not doing so well. And I think that if we solve energy, then we could probably raise the floor significantly, and maybe we would essentially have less reason to hurt each other, to have like conflicts and whatever. So and so that's why I'm interested in materials, uranium in general. Like the clean energy movement, while it has really great intentions, I just don't think the math works out right now, right? There's just not, you just can't build out enough solar and wind to like switch us off of ONG and coal. It's just not enough. So what do we need? We need some intermediaries, right? We need some middle steps or whatever, stopgap measures before we can like solve fusion or whatever, or develop like a Dyson sphere, not for our sun. So I guess we would have to develop, light speed travel and a Dyson sphere if that's going to be our option. But I doubt we see that in our lifetime. We'll see. If we do see it in our lifetime, it's probably like AI leaving us behind. They're like, we're done with this, you guys. We're gonna go gather our energy from some other star. Like, was it Alpha Centauri? I think is the closest one. Yeah, I think that's the closest one. Yeah, just 4 light years away. Just hop, skip, and a jump. Anyway, so for URA, this is what I care about. I care primarily about this structure because holding over this guy means we don't come into this larger area of demand, but really this is more clear sideways. So I would say that this is all still constructive relative to this area of demand as long as we're holding over 23.13. But as of right now, these buyers are doing a good job holding over 27.34, and as long as we're holding over 27.34, we should expect more price action like this, very similar to this. That's really it for URA, and I can bring that back. I still think this is a very reasonable trade zone. I think this was set up for like a member in our stream or something. I think it's reasonable to be looking for the place like this. Okay, URA also has less volatility, I believe, so it should be easier for these videos, right? Because I only see you once a week. So assuming you're not in the chat room or part of this report, then I only see you once a week, and so it's easier to deal with like lower volatility assets. So that's pretty much it. For show and tell, I didn't really get that much done again this week. To be completely honest with you, I'm trying this new system out, so that's like got a lot of my attention. I'm trying to switch from front loading risk to starting to add to trades as they work. So instead of putting all your risk up front, trying to take your risk out as the trade works, I'm trying to do the opposite now because I just want to get a feel for what that is. But what I do have is, if you recall from last week, we gave a shout out to Jono, because John was sharing his process more, and like getting feedback from the community, and refining his process, which I think is awesome. Because if you just stay like inside and you don't really externalize anything, then it's really easy to just get caught up with dissonance and kind of spin your wheels. So I think that's awesome that he's doing that. I think it's awesome that our community does that in general, that people in our community do that in general. But to reward me, or to thank me for giving him that shout out, Jono decided to sass me. He gave me this super sarcastic remark and was blaming me for psyching him out of his trade that he bought today. So this was this morning. He bought the move over the open, and then I psyched him out, talking about the range value area high, the daily value area high over here, which is this guy over here. And I guess at that point he thought that was a mistake, but it ended up being the high of the day. And so I just want to expose John for the ungrateful person that I'm just kidding. The real show and tell is from our friend Mark. So not to be confused with Marco, who is his South American brother, but our friend Mark from Switzerland. I just think this was so sick. This PM setup that he talked about. This is his trade review of it. I don't actually know if he's a swing subscriber. I'm not sure, but he's in the futures room with us every single day, learning the ins and outs of volume profile, this type of analysis. And this is pretty much exactly how I like to look for trades. Well, at least it's one of the setups that I like to get done. So you can pause the video and read through it if you want. He's a big old nerd, so he wrote like way more paragraphs than necessary. He's not very succinct. That's just how he is. One of his many flaws. So anyway, let me just walk you through it, because there's just too much to read. So for PM here, freaking John. So for PM here, he was looking at it like this, right? So you have, I thought I had it marked up, but I guess I don't. So he was looking at this structure. This is a key structure over here. And again, this is the kind of thing that we do in the spring report all the time. Actually, I think he does describe. I'm not 100% sure. All right, so here we go. We'll just mark this guy up over here. Okay, just quick and dirty right now. And you'll see the market affirms this structure as demand over here, where you back test it, hold it. Nice. Pretty much a perfect point of control hold over there. We come back down, and this is where he made his play. On the 13th, he sees that we have extension into this key structure again. Again, this is the area of change. This is consolidating these gains, very similar to what we're talking about for Bitcoin, right? This is the consolidation of these gains, right? And so these gains are not negated unless these sellers can break this structure, and they don't. So he just simply buys that pass back over on the 13th, throws the stop over the local low. I believe his first chop was no later than here. I forget. It was a pretty aggressive chop just to get his risk out of the equation. And I honestly don't remember his other exits, but the tactic is primarily what I care about. This is exactly the kind of setup that I like to get done. And I'm honestly kind of impressed. Mark is a relatively newer member, and so to put it all together so quickly, I think it's pretty neat. I think he's still a terrible human being, of course, but I think he's done a good job putting this trade together. So I'm just kidding. So that's pretty much it. I really think this is so awesome, just because I love to see it. I love to see members of our community progress, right? So he's also pretty generous with his time, writing out answers. I think he has a psychology background or something like that. I think he was admitted into a psych ward or psych institution, I think, and that's his background in. So good for you, Mark. That's pretty much it. So yeah, that is pretty much it. So if you're interested in learning this process and joining a community of like-minded traders who are super supportive and are, really keen on helping you refine your edge, figure out your edge, and then refine it. Give the community a shot. Links in the description below. You can hang out with us in the futures room every single day. We don't just talk trading. A lot of times we're talking about, just having fun. And if you're interested in this room report, which essentially breaks down my process, I'll do 2 novel trade ideas every single week. I don't take every single trade idea, but if I do take that trade idea, then I walk through every single action step by step so that you can reverse engineer it just like this, just like what Mark has done. So that's pretty much it. So appreciate you guys tuning in. Thanks for sharing some of your time and energy with me. I hope you enjoy the rest of your weekend, and I hope to see y'all next time. Farewell.